It's a short lightning panel, only 20 minutes, and I promise there will be a nice lunch waiting for you immediately afterwards. So just to repeat, my name is Julia Padberg. I'm a partner at Z Ventures. We're a Series A stage fund, and we have 4 growth stage investors here, fantastic speakers all on stage, to tell you more about growth capital. I recently witnessed and experienced the world of growth capital myself at our portfolio company Sensor Fact, where I was one of the investors helping them to raise a Series C and then nearly a Series D, but then they got acquired, which was a good exit to ABB. But at least those dozens of conversations made me realize that actually for an early stage investor like me, it's really important to understand how these people think. So, very excited that you're all here. Let's start. Let's keep this very punchy and to the point and short, because I have a lot of questions to you. Let's start with a 60-second introduction by each of you. So start with Gaetan. Yeah.
Hi everybody, I'm Gaetan Bonhomme. I'm actually mostly an early stage investor at Breakthrough Energy Ventures. We're mostly known for large billion-dollar funds that are in North America. We also have a €100 million early stage fund. We mostly do seed, late seed, and Series A, but we now are announcing a growth fund that has yet to make investments outside of our portfolio, which is $600 million. And I'm the partner among Breakthrough Energy Ventures who is going to make investments in Europe out of that $600 million fund. And so I think the big question is going to be, what is growth exactly? For us, growth means you have actual commercial contracts, you're generating revenue, you are able to give us a full picture of unit economics now and in the future, and you're probably around your last round of funding or second to last round of funding. And we are in the market to invest 10 to 20 million into your round, either in a co-lead position or in a follower position, depending. And so, we're open for business.
Great. And so you haven't done a first growth investment yet, but
nope.
Maybe, this is over the 60 seconds, but maybe very briefly, can you say something about everything we've read in the news about the big organizational changes at Breakthrough Energy?
Yes. So we probably have heard that Breakthrough's figurehead is Bill Gates, and there was movement. We used to have a sister organization called Breakthrough Energy, and we are Breakthrough Energy Ventures. We're the venture capitalists. And the decision was made early in this year to basically do away with the philanthropic arm of Breakthrough Energy. And so only the for-profit, market economy-driven funds are remaining. So like I said, billion-dollar fund in the US, 100 million fund, and then 600 million growth fund. So we're open for business for startups.
Well, glad you're still investing. That's great to hear. Manuel of Klima Alantra.
Okay, thank you. Good to be here. It's third time in Ecosummit, a really good event. So I'm Manuel Amillo, partner at Klima Energy Transition. I have financial background, so every time I met with one of the entrepreneurs, I'm jealous of what you're building because I'm only doing investment. But I've been doing this for 20 years, so I have a little bit of experience in what I do. In Klima, we invest in Series B startups all across Europe and United States. We do minimum ticket of 10 million. So it's what we call Series B onwards. What is growth? Well, in our case, I can discuss with all of you because it depends on the sector. In some cases, we believe that the growth has been reached with 3 million revenues. In other, it's more 10 million revenues. It depends on the case. We do hardware, software, and that's and we have done 8 deals to under exclusivity, so we are still need to do another 2 or 3. We are part of the wider Alantra group that is a multi-asset manager with 15 billion under management.
Great, thank you. Then Alex of Trail Impact.
Sure. Hi, everybody. It's really great to be here. I was trying to figure out when my first Ecosummit was. I think it was 13, 14 years ago. So it's great always to be back. I work for Trail Impact. I'm a partner in Corridor Ventures there. We're a multi-investment strategy house based out of Stockholm, Sweden, but I'm based in Munich, in Germany. On the venture side, we invest generally around Series A, B. We've done a Series H, which exists, and we just raised a Series I for that company as well. So growth investing is alive and well. We invest in both green tech and also life science. And one example of what we've done recently is a company called Soil Capital. It's a Belgian company that's helping food corporates with their most pressing problem, that's ensuring that their supply chain doesn't collapse due to climate change. And so they help the farmers within that supply chain shift to regenerative agriculture, thereby storing more carbon, storing more water, increasing biodiversity, and basically making sure that we have food to eat. So it's one of the typical examples of what we like. It's not a nice to have for these corporates to have like some scope 3 reduction, but it's really about the resilience of the supply chain, and so it's a must-have for them. So we really like that.
Exciting. And then last but not least, Anne Boulet.
Hi, so I'm Anne Boulet from Mirova. So Mirova, we are a French asset manager focusing on sustainability as a whole. The company manages something like 30 billion euros of assets, but only 5 billion euros on the non-listed asset side of things. I think that the specificity about Mirova is that we have a rather large energy infra fund, investing in wind, solar, EV charging, green molecules, storage, and in assets and in project developers. And we also have a VC/PE arm, which I belong to, which is a 210 million euro fund investing in energy and the environmental transition at BC stage, I would say, like Clima, and we define growth a bit like Gaëtan did, so investing in post-revenues company where we do have some visibility over the business model. One of the investments we made was actually an investment that we did make with Clima, which was in Grid Beyond, which is an Irish company focusing on, it's a virtual power plant operator focusing on demand response for CNI clients. So I think that it perfectly ticks the box of growth being a Series C, and as well as all the themes that we talk about all day here. I hope it illustrates a bit what we do. And,
Great. Then I have a few founder-focused questions for all of you. So to reverse the order, let's start in the back with Anne. So the first question is, what are you looking for when a founder that comes out of the Series A into the Series B comes to you for growth funding?
I think that there are 4 signals that we cling to. The first one is indeed to have positive gross margins and first commercial clients, so to really see the business model shaping. The second is that we need to have some visibility over a path to profitability, whether it's in 12 months, 24 months, 36 months, but we need to believe that it's achievable and also with a level of revenue which is realistic compared to industry benchmark. Not seeing a company where the break-even point is really too high in terms, and which reflects a corporate structure which may not be efficient enough. The third point, I guess, which is rather different from venture, is the focus. Venture is a lot about experimenting and finding the business model, and in growth, we want to somehow have the proof that the thing works and we're investing to scale. And the last thing, which we mention all the time, but it's even truer at growth stage, is to see that the team is structured not only with a pair of founders, but with a functioning C-level and even below, so as to be able to deliver this growth without overstretching all the resources, right?
Great. And then Gaëtan, in your case, is that quite similar? Because you're investing in big breakthrough technologies where sometimes it's pre-revenue. So what proof points are you looking for in investments?
That's what I said when I say growth. It's just, we sometimes function by exception.
Yeah.
Maybe the one thing I would add, in addition to what was mentioned, is there is always the big looming issue of your first of a kind big project. Whether it be a first plant to start churning out units in the field, or whether it be your first project where you install your systems. And there is always a question of when does that sit versus Series B. For the fund that we're trying to deploy right now, we'll try to be on the right-hand side of that, which is we want to see an existing first project or first siting where you have developed already unit economics, and we're trying to see that. So it doesn't matter. We may make an exception in terms of like, what does that mean for the revenue ramp for now? Because maybe that was financed through, regional help, and the economics are not as clean. But we want to be able to look at all that happened during that project and be able to make projection for the future.
Great. And then looking at the process side, Emmanuel, when do you feel is the right time for founders to start approaching growth investors?
Yeah, good question. I think this, I would answer this based on my portfolio and real experiences. So my advice is that the sooner the better. So we have 10 portfolio companies, and in 6 of them, we met the company and we had the relation 1 or even 2 years before we sent the money to them. So, and there are different cases. One Toronto company or Canadian company, we met them, and they were raising Series A, but they were enough revenue so we could have invested. But in that one, we are not lead investor in US, so we cancel and we monitor them during 2 years, and then in April we did the investment. So that's an example. Other case, or latest deal, Echandia is a company doing electrification of maritime. We met them also in 2022, and we closed the deal 2 months ago. In that moment, they were not ready. Neither we believe the technology or the market. So it was a matter of, again, following them, doing meetings, and then once we thought that the market was ready, then we invested. So, but we have other examples, like our portfolio company Turnity that has pitched some moments ago. We met them, and in 6 months we thought, wow, what a good company, and now we also did the investment. So it's, don't be shy, really, don't be shy. Go, and we are paid to invest in companies, so we have to spend time with you. So don't be shy and contact us.
Great. Well, these were some 3 very strong advices to founders. Now for the VCs in the room, early stage VCs like myself, I have a question. So Alex, what do you think we can do to prepare our portfolio for when they are ready to raise growth capital?
Yeah, basically follow also what Manuel just said, right? Start very early. There's a great saying in German that, you know, after the fundraising is before the fundraising. So you always have to keep that hustle. And I think this is true for early stage, but also later stage investors like us. I think it's really important to hustle for your companies, right? Make sure that the next round of VCs are very aware that this company is growing and it's doing well. Ideally, don't send out a pitch deck with crazy numbers, because when the company comes back in 2 years, we're going to go like, ooh, you didn't achieve that. It's one of our favorite hobbies. But the idea is that, like Manuel said, make sure that the next stage is pretty clear, that you have milestones that you can communicate early on. You're going to say, I'm going to hit this and this and this, and then we're going to talk, okay? And then once you hit that, call us up, and then we'd love to take a deeper look. So start early.
Thanks. Now I have a next round of questions, but I want super short answers because we're approaching lunch. So Anne, first question to you. What is a common mistake that founders make when they approach you for growth capital?
I guess there are 2. The first one is to come to see a growth investor, but actually having a new venture project, kind of diversifying towards something which has nothing really, which has been experimented before.
Right.
And the second is lacking operational KPIs, right? It's kind of a bad signal that some companies
need to be prepared.
Yeah, some of them wait for us to push for KPIs, which we think should be useful in the daily operations. So,
yeah,
short.
Great. Then for Alex, I have a complicated question to answer very short, but it's a challenge to you. So how have you seen the growth criteria and valuations change in the past years, and where do you think it's heading?
Yeah, I think it's gotten harder, right? So there's capital constraint. We've seen quite a few charts today that there's capital constraints. We as growth investors have become even more cautious. We can't invest on the promise that this kind of thing will work someday. We really need to see some ideally data and where you are on that trajectory. And so I think the people who can't do that, they're having a really hard time raising this kind of growth capital. Maybe 3 years ago, they still would have been able to get. So looking at the lovely fundraising environment we're in, so to the founders out there, as VCs have to fundraise too, and it's horrible. We see difficulties, right? Which means that again, capital constraints will only increase, would be my guess. So even more important to prepare. And I think we heard today from the great exit panel or from VSB when they were on stage, get your house in order. Show us as growth investors that we will not lose money on you, because generally growth investors will not look for the 2100x thing. Of course, we're happy happy if that happens. But it's more important to show that we can reach at 5 to 10x, but 0x is pretty unlikely. So show us that that's the case, and then hopefully, despite capital constraints in the coming years, you'll still be able to raise.
Great. Manuel, just like said Ventures, Klima is pretty much focused on the energy sector. So in the growth stage in Europe, do you see enough interesting opportunities to be very selective in which deals you invest in?
Yes, and that's short answer is yes. And the problem we are having is that we really need to be very selective because we receive a really lot of deal flow, and we need to prioritize which are the good ones or not. And every time we are trying to find a new mechanism to select the ones from the other. And I guess this will continue, but this is also thanks to the ecosystem. But you are earlier stage, but there are also seed investors. So if you continue investing in energy companies, growing them, going to Series A, then we will continue receiving enough deal flow for the next 5-10 years for sure.
That's good news, and we'll do our best. Gaetan, you're representing Europe in an American fund, so you must have seen the differences between Europe and the US. Do you think that's what is the difference, and do you think it's okay, or should we do something better in Europe?
It needs to change.
It needs to change.
Keep evolving. We need to keep catching up as Europe.
Yeah.
The big obvious difference that I think everybody knows is a series. A late seed in the US is equivalent to Series A from a amount and valuation standpoint is just not fair.
Yeah.
And I think our entrepreneurs are just as good. So that's A. B is we see mega structured early stage investments, particularly now with AI, where a founder that comes out of Tesla is able to raise a 50 million late seed at 150 pre, and in Europe we have great repeat entrepreneurs, and somehow we're not able to collectively say, well, that person should be able to compete on a worldwide market.
Yeah.
And so I hope, as investors, we're going to close ranks and make those things happen and support our entrepreneurs. So
it also means that the growth investors with a big budget need to step into those rounds and compete with us.
Do that.
Yeah, right. Okay. Then big trend, obviously, at the moment is AI. So are any of you using AI in your fund, in your investment strategy? Yeah. Anne, can you say something about that?
I think we are trying to use AI as a tool as much as we can, either to increase our own productivity or to be able to have access to more research. Or then the next question is, do we use it better than other people, or is it differentiating in our investment strategy and the value we can bring? For now, to be honest, I don't know what the future will tell, right? But we are adapting, I guess, as fast as our own portfolio companies are to be able to use AI in all parts of our job, right?
Yeah. Is any one of you already moving towards being a data-driven VC?
Oof.
Not yet. Okay. But you're all using AI basically in your investment practice.
We are. So we're not. It's not. That's the frustrating part of the software guys versus the hardware people.
Yeah.
Is there is no institutionalized use of AI at Breakthrough, for example. But of course, we are all having our little. It's like the Slack guys, right? Then everybody in enterprise had a $10 a month subscription until finally you were like, well, look, you should create an enterprise account. Well, I wish we could do that in energy. Unfortunately, that doesn't work this way for our business, but for AI, certainly does. So I'm using it. I'm fascinating. I'm probably one of the worst prompters in the world.
That doesn't help. Yeah, and we all need to educate ourselves in that.
Fantastic results, but we're all have to catch up and figure out the best way to use that new tool, right? So.
Yeah, so this is moving and evolving extremely fast, obviously. So Alex, do you have a view on where this is going to end up? So how is AI going to affect our profession in venture capital?
Everybody is always a bit worried that their jobs are going to be gone pretty soon, right? One of my good friends is the lead AI at BCG, and he was telling me, "Don't worry, it's going to be okay." So it was good to hear. But I also believe that because I think the AI couldn't sit here and interact with everybody, right? And it's still a very much people-driven business because an investment is a very long-term relationship. So no matter what the AI tells you what you should be doing, in the end, it's about being able to work together towards a common goal, and the AI can't really take that away. So I think it can make us more efficient. At Trill, we built our own little AI engine, which is working okay. It still can get better. We use all the tools to become smarter. But in the end, I think this kind of ecosystem is still incredibly important and will stay important for quite a long time.
Yeah, I think so too. And what about you, Manuel? What do you think about the future?
No, we started when we were really strong pushing for AI inside Alantra, but then it's true that there was some concerns on data protection and other things. So in Alantra, I would say that we are not the fastest early adopters on AI. We are starting and we have our own AI tools. Now we are sorting NDA with AI and some things, but first we have to sort out all these compliant things, and now we are starting to initiate them. We hope to gain efficiency, and that's the objective of the entire Alantra group, but it's taking time.
Yeah. Okay, then to wrap up, for each of you, one sentence, one piece of advice to founders in the room who ever want to raise growth capital, or who would want to raise growth capital within the next 12 months. Anne?
Come and find me this afternoon.
Yeah, it's a good advice. Yeah, that's it. Okay, then you.
Yeah, make your existing investors hustle for you. They invested in you, so make sure that that growth round can happen, and they can be really helpful in that.
Yeah, I already mentioned, don't be shy. So we are here to invest in companies, and we need to dedicate part of our time to early stage companies that would be in our scope in the next 12, 18 months.
Yeah, I'd say, as you've heard, growth comes in all shapes and colors, and so as early as possible, go schedule a call, really try to understand what we invest into, and that can come in periods of time. Like what we tell you a given year can change. So engage early and figure out like what's your top 5, top 10 list, and keep the engagement high. It's very important.
Great. So what did we hear today? Growth investors are very happy to speak to early stage companies. All of them, I hear. They're looking for companies who are actually, they have a repeatable business model, clear market validation, and entrepreneurs who understand capital efficiency, but also timing. So timing in terms of when to raise the capital and when to reach out to growth investors. So thanks a lot. If you want to learn more, come and find them in the lunch break. I think now we all deserve our lunch.
Great. Thank you.
Thanks.